Good morning, hello and welcome to Money Control's live stream. You're tuned into a fresh new edition of Opening Bell with me, Lovisha Darad. Well, we are back with a new day, and after back-to-back winning sessions that Dalal Street saw, the GIFT Nifty is indicating a quiet start for the Indian markets. The pre-open rates right now is indicating a very quiet start, but Sensex is up about 200 points and Nifty is also flat in the green at this point of time in the pre-open trade. But if we take cues from how the global markets are faring, US markets ended lower overnight ahead of their March retail sales data. The sentiment was similar in Asia Pacific markets this morning too. Japan's Nikkei 225 fell about 0.3%, and even China's CSI 300 also fell nearly 1% today, despite China's Q1 GDP numbers, which came in better than what the street was estimating. But yes, when we are talking about macros on the China GDP front, how can we forget about India? Because India is faring quite well. Yesterday, we saw the March retail inflation data touch nearly a 6-year low of 3.3%, below what was street was expecting. The breather definitely came in from the vegetable prices, which has cooled off by a negative of 7% Y-on-Y in March. So yes, this was quite positive for India on this front. Another key positives continue to be the cooling crude oil prices, which is hovering around your $65 per barrel, and dollar index, which continues to stay below that 100 odd levels. So we'll watch out if we do open negative, or if there is any, and hope that there is no major downside. But we'll take some stocks in focus too. Wipro is set to reveal its Q4 results today. There will be some earnings reaction to ICICI Lombard, Prudential, and of course Irida as well. So like usual, keep dropping us your stock related queries and we'll take them up shortly. Moving on, let's quickly take a look at the top headlines, Sisa. Wall Street ends lower even amid tariff uncertainty. The Dow sheds 155 points, while the S&P 500 and the Nasdaq end marginally in the red. Stocks in Asia Pacific also open lower as investors see China's GDP come ahead of the estimates. The GIFT Nifty meanwhile is indicating a lower start for our own markets. Oil prices remain steady as investors digest the latest on US President Donald Trump's tariff orders. Gold prices rise to a record high, helped by safe haven demand and a weaker dollar. Inflation cools to its lowest level in nearly 6 years. CPI in March eases to 3.3%. Food prices drop to a 40-month low of 2.7%. In key earnings, Wipro is set to report Q4 numbers today. Brokerage estimates dollar revenue will decline 0.5% on a sequential basis. The key monitorable is to watch out the guidance given amid the macro uncertainty. And in recent banks, external audit finds a 19,000 crore reduction in the bank's net worth due to derivatives discrepancies. Sources have also told that the bank may see at least 3 senior exits due to the delay of reporting in discrepancies. Meanwhile, Gensol has received an interim order from the SEBI against its promoter and directors, barring them from accessing the market, and has appointed a forensic auditor to probe fund misappropriation and misleading disclosures. All right, if we look at the last session, definitely the benchmarks saw quite a good rally for the second consecutive day. Nifty has jumped about 540 points amid the tariff reprieve as Donald Trump has given out a 90-day pause on the reciprocal tariffs. If you look at the pre-open rates are also pointing out to a good start for the markets, despite what the GIFT Nifty was pointing out ahead today. Yesterday, we also saw that the Nifty has risen about 1,600 points in just 5 trading sessions. The participation came in well from the broader end of the markets too. Midcap and smallcap indices have gained up to 3% in the last trading session, and all the sectoral indices ended in the green for the second straight day. So yes, all in all, quite a good day for the markets yesterday too, and today we are hoping also to see a good start for the Indian markets. We have some Q4 results which will be revealing today, as I mentioned about Wipro also. Other than that, we can see Angel One and GTPL will also be reporting their Q4 results today. But some of the cues that will set the tone of the trade today, 3 major factors, which is your option cues data, Nifty put call ratio, which has slipped to 0.93 levels from 0.96 levels in the previous session. The second up on your screen is the F&O ban list. The stock that has been retained include the likes of Birla Soft, Hindustan Copper, Manappuram Finance and Nalco. However, no stocks have been removed from the ban list yet. And of course, a very good data coming in from the fund positioning, where FIIs have been net buyers of stocks, which was worth about 6,000 crore rupees in the cash markets yesterday. This was the biggest single day buying which we have witnessed since March 27. So yes, quite a good day from the fund flows perspective. And DIIs, however, they have sold stocks which is worth about 1,900 crore rupees in the cash markets. So yes, all in all, we are hoping that the push that comes in from the FIIs continue to remain so in today's session also. But just a couple of minutes before we go to the open, but let's quickly get on board with a technical expert of the show. Joining me is Nilesh Jain of Centrum Broking. Nilesh, yesterday we saw a good start for the markets for the week also. Nifty is back above 23,300 levels. What are you expecting next to happen for the following week?
Very good morning to you, Lovisha. Good morning, everyone. So first of all, yesterday, if you look at the overall development that we have seen, multiple positive development. First of all, Nifty cleared its 23,000 hurdle decisively with a good gap up opening. Now that particular level will act as an immediate support. Multiple reasons, because we have cluster of support now at 23,000. 50-day moving average, 21-day moving average, as well as 23,000 strike on derivative front. For the weekly FN expiring tomorrow, the data also suggests that 23,000 has meaningful OI concentration. So we are expecting a positive expiry as far as tomorrow's weekly expiry is concerned. And today as well, if at all we see any dip towards 23,300, 23,250, that might get bought into, because yesterday we have seen fresh put writing at 23,300 strike. Now the structure has turned positive, back-to-back two gap ups opening we have seen in last two consecutive sessions, and that is giving more confidence. Although the immediate hurdle for the Nifty is placed at 23,400, which is 100-day moving average. A breakout about 23,400 will open further upside towards 23,500 to 23,600, and we are slightly positive on the market from a short-term perspective as far as April series is concerned. Now, one more important development we have seen yesterday was a sharp decline in the India VIX volatility index of 20%. So it is correcting after a jump of 45% in the previous week. 50% retracement has already been done. A further drop from here will provide more comfort to the bulls. Lastly, if you look at the Bank Nifty structure, we have seen a good breakout yesterday. It is trading well above all long-term and short-term moving averages. The important support now for the Bank Nifty from intraday point of view is placed at 52,000. That's the strike on the put side on a monthly FN expiry where we have seen huge amount of put writing. And on the upside, 52,600, 52,800 are the resistance zone for the Bank Nifty. So overall, buy and decline should be the strategy as far as Nifty and Bank Nifty is concerned.
Okay, all right. Yes, that's right. We've seen a sharp cool off in the volatility also. But Nilesh, yesterday we saw rate sensitive sectors also participating well in the rally. How are you viewing them on the charts, be it the likes of auto index, realty index? How are they looking on the charts at this time?
Absolutely. So yesterday we have seen a good momentum in realty pack and also NBFC space as well. Auto, you have rightly pointed out, a good dead cat bounce was seen. So overall, from a short-term perspective, the structure for the realty pack is looking positive, specifically counters like Lodha, where we have seen a good short covering and positive move yesterday. So we can expect a follow-up move to continue in Lodha for further upside towards 1250 to 1300. The support is at 1170. Buy and decline should be the strategy in this particular counter. Apart from that, Prestige Stays is another stock where we have seen a good breakout from a falling trend line. So this particular counter looks very attractive at current level. We have seen a good correction all the way from 2000 to almost it has tested the lows of 1050. So from here, one can play this particular stock towards 1300 to 1350 with the stop loss below 1130. Prestige is also a buy. Within auto pack, if you look at specifically two-wheeler space, yesterday we have seen a good momentum. Hero MotoCorp, Bajaj Auto, TVS Motor, all these three stocks have given a good reversal. So Hero Moto is a buy for a follow-up move to continue towards 3,900 to 4,000. Stop loss can be placed below 3,700.
Okay. Nilesh, what about the broader end of the markets? How are you viewing small cap and mid cap indices? And in terms of valuations also, do you still see them as frothy? Yesterday also we saw good rally coming in, up to 3% uptick we saw from both the mid cap and small cap indices.
Yes, rightly pointed out. So, mid cap and small cap, in fact, these broader markets indices have seen a lot of corrections, a lot of underperformance was also seen in the past. Now we can expect a strong momentum to continue in the broader market. Reason being, we have already seen a good base formation as far as Nifty Midcap is concerned. Double bottom kind of pattern can be seen at 47,000. It has already cleared its 50-day, 21-day moving average yesterday. Now, the focus will shift towards earnings now. Earnings have already started. It is important to see whether how exactly the earnings pan out as far as the broader markets are concerned. So, as far as mid-cap index is concerned, 50 to 300, 50 to 500 is the level on the upside we are expecting. And Nifty small cap index is also looking on a positive side for a follow-up move to continue. So, yes, apart from large cap, the focus can be shifted towards broader markets as well.
Okay, the shift it could be focused towards broader markets, but yes, we have opened in the negative territory for today. Nifty above, however, above that 23,300 levels, but below what we are seeing. Flat in the red at this point of time, 0.1% up downtick that we are seeing. Sensex is also down about 100 points at this point of time. So yes, a very quiet start for the markets as we were expecting. If you look at the broader end of the markets, like we were discussing, mid caps are flat in the green at this point of time. Small cap also flat in the green at this point of time. So yes, the majorly the focus that we were talking about, the shifting of focus from large caps to mid caps and small caps, that can be a little bit seen in the open session. But other than that, if you look at India VIX continues to cool off, about 3% down slide we can see on India VIX. If we look at the Bank Nifty index, that has opened quite strong, 0.5% gains coming in for the Bank Nifty index. If you look at the other sectors, for instance, your Nifty Realty Index, which was the top sectoral performer yesterday, today also gaining about 0.5% at this point of time. On the other hand, the top losers, Nifty IT Index with about nearly a percent cut that we are seeing. Wipro is set to report its results today, so some volatility is being ensued in the IT pack also. Nifty Auto Index, which fared well yesterday after some hints on the pause of auto tariffs, has again succumbed to selling pressure, 0.3% downtick coming in for the auto index too. Nifty Metal Index with about 0.3% cut coming in for there too. So all in all, it's a very mixed trend that we are seeing at this point of time. Let's take a look at some of the top gainers on the Nifty 50. Some of the banking plays and the financial plays are dominating the Nifty 50 gainers list. Shriram Finance with about 0.5% gains, IndusInd Bank with 0.4% gains, Kotak Mahindra Bank, Axis Bank, ICICI Bank, all of them doing well and topping on the Nifty 50 gainers list. Other than that, we can see some of the pharma, hospital names like Apollo Hospital with about 0.3% gains coming in there. On the other hand, if you look at the contrary picture on the Nifty 50, some of the tech names, as we were anticipating, they are seeing a bit of a selling pressure. We can see the likes of Infosys, Tech Mahindra seeing a cut of about 1% or so. Other than that, we can see Titan, Hindalco, Tata Steel, Tata Motors yesterday, one of the top gainers on the Nifty 50 today, again succumbing to selling pressure with about 0.7% downtick. Maruti Suzuki also seeing a cut of about 1.4% at this point of time. But yes, so one stock in focus that will be today, that is your Wipro. It's seeing a bit of a cut right now, 0.3% downtick. The Q4 results are expected today, and brokerages are estimating that the profit is expected to grow mildly on a sequential basis. On the other hand, the revenue is expected to grow by 2% on a sequential basis. Margins, however, are expected to remain deteriorated, 17.2%. That is what the street is estimating for Q4. Nilesh, after Jan, the stock is down 23% for Wipro. Do you expect this trend to stay? Because we are seeing quite, once again, IT succumbing to selling pressure today.
Right, Lovisha. So the stock, specifically Wipro, has been in a downtrend, continuously forming a low top and low bottom formation. Although we may see some pullback towards 250, 255, but it's an avoid as of now till the time we get more clarity on Nifty IT index itself, where we are witnessing a continuation of a downtrend. So overall, IT stocks are likely to remain under pressure and move sideways. We are not getting any signs of reversal as of now. So till the time we don't see any conviction reversal point in these Nifty IT stocks, better to avoid. We have better options to play out, but Nifty IT is not something that we are focusing as of now.
Okay, all right. Let's take another stock in focus, which is your ICICI Lombard. The stock is seeing a bit of a downtick, 3% slide after the company posted 2% decline in net profit for the March quarter. On the other hand, we can see the gross premium income for the March quarter has grown by about 10% year on year. Nilesh, if you look at the stock from the March lows, the stock is up 11%, but today it's reacting negatively to its Q4 results. What is your view on the counter?
It has a very strong support near about 1700. Although today we are witnessing some profit taking from the highs. Yesterday we have seen a big bullish candle. So looks like more sort of a consolidation because there are multiple hurdles in this particular stock, starting with 1830. That's the immediate resistance, followed by 1900. That's the 200-day moving average as well. So as of now, no clear trend. And if somebody's already has bought into this particular counter, stay put with a stop loss below 1700. If it breaks below 1700, then the target on the lower side could be somewhere around 1620.
Okay, 1620 is where the support lies. But reacting well to its Q4 results is your ICICI Prudential Life. With the stock is seeing about 3% gains after the company reported a two-fold year-on-year jump in its standalone net profit in Q4, and we saw the net premium income also grew by about 11% year-on-year. Nilesh, ICICI Prudential from 700 odd levels, it is down to 500 levels. Do you expect a good recovery coming in for the stock now that the Q4 results are out?
Certainly, we have seen a decent correction in this particular counter, and good part after this correction is that the stock has found a multi-month support somewhere around 530. So 530 is acting as a very strong support, and on the upside, if it breaks above 610, then it will be considered as a short-term bottom for this particular counter. But as of now, we are witnessing merely a pullback, and this pullback may extend towards 600 to 610. I would wait for a breakout above 610, then probably one can buy this particular counter and play the momentum till 640 to 660, and stop loss can be placed below 560. As of now, within insurance space, specifically health insurance space, we are liking HDFC Life. So good momentum and good breakout can be seen on the chart today as well. So this particular stock looks strong for 730, 740 levels on the upside, can be bought from a short-term perspective, keeping a stop loss below 695. So HDFC Life is something that is looking attractive at current market price.
Okay, HDFC Life you prefer at this point of time. But let's move on and let's take some of the queries that is trickling in on our live feed. The first query coming in from Naveen is asking the views on Kirloskar Brothers. Nilesh, if you look at the stock from January or December odd levels from 23,000, from 2300, it is down to about 1600 odd levels. What is your view on the counter?
If you see, as mentioned, the broader markets are witnessing a pullback, and the stocks within this space are also witnessing a pullback. So Kirloskar Brothers have found a good support at 1450 to 1460 kind of zone. Kind of a double bottom can be seen, but it has immediate resistance and a major resistance at 1800. Till the time it doesn't cross above the same, we can expect some consolidation to continue. But if somebody has already bought into, I would advise to stay put, keep a stop loss below somewhere around 1500. That's the immediate support, and wait for a breakout. A breakout above 1800 will open upside towards 2000 to 2200.
Okay, 2000 to 2200. Let's move on to another viewer query. Naveen is asking the view on Zomato shares. He's been holding at 240 levels. He's asking whether or not to hold or exit at this point of time. Zomato, any views, Nilesh? Of course, right now we can call it as eternal. But anything on the counter, because right now the stock is trading at around 214.
Even in Zomato, if you see, we have observed that stock has multiple time tested the lows of 200, and from those levels we have seen a multiple time a recovery. So it has a very strong support at 200. First of all, that should be the stop loss if somebody is already holding the long position. And on the upside, the momentum can be seen till the levels of 220 to 225. So purely from a short-term perspective, a momentum can be seen on the long side till 220 to 225. If somebody wants to take a positional view, then I would say keep a time horizon of 6 to 8 months. I wouldn't be surprised if these stocks moves beyond 250.
Okay, all right. 250 levels, that is what we are eyeing out for. The next query coming in from Satya, he's asking, how are the charts indicating for a fresh long position on Titagarh Railways? Titagarh, from the past 1 month, the stock has been doing quite well, Nilesh. 15% run up that we are seeing at this point of time. Do you expect this trend to stay?
Right. So today we are witnessing a good breakout coming in above 50-day moving average, as well as the stock seems to have found a good support at 660, 700 kind of zone. So yes, it's a buy. Buy from a trading perspective, a momentum can be seen till 840 to 900 kind of levels on the upside. But keep a strict stop loss at 735. That is acting as a very strong support. So keep a stop loss, and if already bought, then stay put.
All right, let's move on to another viewer query. That is your Shweta is asking the views on Irida. She's holding it at 266 levels, and should she use this rally to exit, or is there any potential to go further up? What is your view, Nilesh? Because the company has posted good now Q4 numbers also, and the stock is reacting well today too, 7% uptick.
All right, Lovisha. So yesterday, Ireda came out with a good set of numbers, and today we are witnessing a reaction of the same. Good breakout can also be seen in this particular counter. So looking at the overall development, the recent development after a sharp decline that we have seen recently, in last 2-3 consecutive sessions, we have seen a strong reversal candle in this particular stock. So we can expect a follow-up move towards 190 to 200. So 200 till 200, a momentum can be played, but keep a strict stop loss in order to protect your capital, protect your profit at 170. So 170 should be the stop loss, and momentum can be seen till 190 to 200.
All right, 200 levels that we can eye out for. But let's move on to another viewer query. That is your Pooja is asking the view on Zentech Technologies. She's holding it at 2050 levels, and she's asking whether she can hold it for another 3 years, and when should she average. Zentech, it's trading at 1500 now, so she's seeing a bit of a loss, Nilesh. But from March lows, the stock has seen quite a sharp reversal. Any thoughts there?
Right, so quite a sharp reversal can be seen from the levels of 1000. We have already seen a spurt of 500 point in this particular stock, but there's still some more room left on the upside. 1600 to 1650 are the levels on the upside can be seen. The stock has very important resistance at 1750 to 1800 zone. So as of now, if somebody has already bought into, then stay put, keep a trailing stop loss at 1400, and we can expect a follow-up move towards 1650 to 1700.
All right, 1600 to 1700, that is what we need to eye out for. But let's move on to another viewer query, which Alex is asking the view on GNFC, and if there is any major resistance that is eyed out for that we can surpass. GNFC past 1 month 5%, very small uptick, but the stock has been doing well. Any thoughts, Nilesh? Can the rally extend?
See, rally may extend, but it has a very important resistance at 512. So I would wait for a breakout above 512 that will give me a confirmation from the breakout of double bottom pattern. And above 512, the stock may rally towards 540 to 560. But looking at the overall development, we can expect this particular counter to break those levels and move towards 540 to 560 from short to medium term perspective. If somebody is already holding the long position, then keep trailing stop loss at 482. So 482 should be the stop loss, and the structure looks positive.
All right, the structure looks positive for GNFC. Let's move on to another viewer query. Well, RJ is asking the view on L&T Finance, and if there is any support level that we can eye out for. If you look at L&T Finance, again from February lows, the stock has seen about 18% uptick. Nilesh, any thoughts on the counter?
So Lovisha, if you see, all NBFC counters have seen a good momentum recently. So L&T Finance is also looking positive for a further follow-up to continue. The stock recently reclaimed its 200-day moving average. So it is trading well above all short-term and long-term moving averages. The stock has formed a good base formation, good consolidation breakout can be seen. So looks positive to me. For a follow-up move towards 165 to 170 with it has a very strong support at 151. So 151 should be the stop loss for the long position, and I would suggest to stay put.
Suggest to stay put at this point of time. Let's move on to another view query. There Satya is asking the views on M&M Finance. Nilesh, the stock has been quite range bound lately. Anything that you're eyeing out for, any promising horizon that we can see for the near term?
Well, this stock is not looking that promising as of now, although we are witnessing kind of a dead cat bounce after testing the lows of 240. So this pullback may extend towards 280, 285 or maybe 290. But the conviction is not coming in this particular counter. But you have better option within this space. We already spoke about L&T Finance, you have Bajaj Twins, you have LIC Housing Finance. So better to avoid M&M Finance as of now. But if already holding the long position, then keep a trailing stop loss at 261. And if at all you see the levels of 280, 290, that's a good level to exit.
All right, 290 levels are a good point to exit on the stock. But let's move on to another viewer query. That is, your Gitu is asking the views on KFin Technologies. KFin Technologies, how does the counter look like? Again, this counter has also seen quite a sharp reversal. Nilesh, any thoughts on the counter?
Well, this particular counter is trading in a very tight range of 1100 on the upside and 900 on the lower side, acting as a resistance and support respectively. So there's no clear trend as of now. But if somebody is already holding the long position, then one should keep a strict stop loss below 900. And on the upside, if at all we see any breakout above 1100, that will take this particular stock towards 1300 to 1400 as well. But as of now, no clear trend, hence no view as of now.
Okay, all right. Just one last question before we let you go, Nilesh. Then any thoughts of any top picks at this particular hour? We're seeing a bit of volatility, but what are your top picks at this point of time?
Right, so there are few stocks on our radar on the long side because whatever dips we are getting that are getting bought into, the structure wise, as we mentioned, the outlook on Nifty, Bank Nifty and also on the broader market looks positive. A continuous decline in the IVs are giving more confidence to the bulls. So focus should be on the long side, focus should be on stocks. So first of all, HDFC Life, we already spoke about this particular counter. It looks positive for 725 to 735 from a short term perspective with a stop loss below 700. HDFC Life is a buy. Apart from that, Olectra Green is another stock where we have seen a good reversal from the lows, and this particular counter looks positive for 1260 to 1300 on the upside with a stop loss below 1160. The Olectra is a buy. Apart from that, the third buy stock is LIC Housing Finance. We already spoke about NBFC space, the financial space as a whole, where we are looking at the recent development. We have seen a good recent momentum, and this particular counter specifically, we are witnessing good build up on the long side as well. So LIC Housing Finance looks positive for 605 to 618. These are the levels on the upside one can eye for, and with a stop loss below 582, LIC Housing Finance is also buy.
Okay, all right. So 3 stocks that we need to watch out for: Olectra, LIC Housing Finance and HDFC Life. With that, we have to let you go, Nilesh, but thank you so much for your time. Hope that we connect with you soon.
Thank you, Lovisha.
All right, let's take a quick check of the markets at this point of time. Well, Sensex and Nifty, both the benchmarks are off their day's low. We have flipped into the green at this point of time. Sensex up, flat in the green at this point. Nifty also above that 23,300 levels, seeing a bit of a recovery at this point of time. Definitely the recovery is being supported by the banking index, more than 0.5% gains coming in from there. Nifty Media Index also giving about 0.2% uptick. Nifty FMCG Index, which was yesterday the worst sectoral performer, ending flat in the green. Today also it's opened up in the green and it is doing quite well, 0.2% gains coming in there too. PSU banks, however, are doing quite well, 1.5% uptick, and Nifty Realty Index holding on to their gains of about 0.3% too. Broader end of the markets, mid-cap and small-cap indices, both of them doing well, with about small caps definitely outperforming with about more than 0.5% gains coming in. But let's quickly move on to the next guest of the show. We have Sandip Agarwal of Sowilo Investment Managers joining us. Sandip, good morning. We have plenty of tariff volatility still. How much do you believe is possible for the US to hatch the trade negotiations with different countries, given now that we have the 90-day pause in tariffs too?
Yeah, hi, good morning, and thanks for having me on the show. 90 days obviously doesn't seem to be enough, but remember that it is not only 1 or 2% who are involved in these processes. I think every country has a strong set of representatives with all the data with them, and they go and participate in this kind of negotiations with experts from the negotiating country as well. And I think, while it looks like a very cumbersome process and all, finally every country knows where they want to put tariff and where they don't want to put tariff, what are their strength areas and weakness areas. So I think while 90 days may look prima facie less, but I think, a trade agreement in place or the direction of the talk, even if that is in positive direction, I think market will take clue from that, and that will give more certainty on going forward on the global economic growth and obviously India's economic growth. So that is the way we look at it.
Okay. All right. What about the volatility, Sandeep? Because can we expect more of these volatile swings to come? There's quite a lot of uncertainty. 18 to 16% volatile swings we have seen so far. So, what are you expecting, at least for the medium term?
So volatility is a factor which is a combination of many things right now. Today, as we see, other than tariff, we are not seeing any major causes of volatility. But you never know if there is some other front on the war side which opens up the ongoing battle between Russia and Ukraine. It takes an ugly turn, or something happens in on the Israel Gaza side. We don't know what can happen, and even Iran sometimes seems that there are some developments happening there. So it is very hard to take all those calls because volatility is a nature, and market has to ride through that. But I think from tariff perspective, people have built in the worst case outcomes, and now anything which is happening, all discussions, everything which happens, that will keep on adding more certainty and calm in that side. So I believe that last 2-3 months we have seen that it was a sell on rise kind of market. Now I think smart people and the big funds and everyone will start accumulating wherever they are. They will get an opportunity, in my view, with the cut in GDP rates by the top banks globally. The difference between India's GDP growth and other GDP growth has further increased. So India becomes the best market in the world to invest. In my view, there is no alternate. A few months back, China was seen as a market. It has outperformed substantially, and then they have got into much worse tariff war than where India is. So now I think the only market in the world which is investable and a strong market to invest with good GDP growth, stable leadership, I think is India. So I think that a lot of money will come back to India at a very rapid pace, and we are extremely optimistic, more optimistic than last 1-2 years on India now.
Okay, more optimistic. So can we say that this is the time to breathe a sigh of relief? And how are you viewing from the fund flows data? Yesterday we saw biggest single day buying from the FIIs in like over 10 days. So can we expect that the sell India and buy China narrative from the FIIs to take a shift?
100%. We believe that that trade is over because of two reasons. One, China massively outperformed. We seen good correction wherever there was froth in the small index and mid cap, and even in the large cap. To some extent, those corrections have taken place already, and I think you will incrementally see a lot of money coming in now. I don't see any reason why India will not get incremental fund flows, and we are very constructive. We have deployed all our cash in last few days, and we believe that the time of India has come back in a very strong way. We have 3 to 6 months of period where the results were not coming, and we were also uncertain on the tariff outcomes. But now we are certain about one thing, that will be the least punished, and we will be the most well positioned among all this. And remember, I strongly believe that every country would like to have their second China plus one to be implemented strongly to keep their supply chains strong. So I think we are in a very good position today.
Okay. Like, so Sandip, you've been talking about that India is relatively better placed than what other global peers are. But if you look at Chinese dumping, that has surged over the past 2 weeks in India. So while everyone is talking about India being relatively better placed, how do you expect this move to, pan out for the domestic manufacturers in India?
So I think two things. One, the regulators and the government is aware of all these developments, and they keep on doing a reasonable interference wherever required and give safeguard duty and other options. Secondly, I think Indian manufacturers have also become a lot more efficient in last few years, because they know that their actual competition is with China, and our wage cost and our labor cost is relatively cheaper. So I think, we are not in that vulnerable position which we were a couple of years back. We are in a much better position, and I'm sure that government will come in wherever it is required to safeguard the domestic industry, and they have been doing it.
Okay, all right. So it is able to mitigate that. Sandip, retail inflation that has touched to lowest level seen in nearly 6 years. Do you believe that India's macros will also speak louder than the tariff narrative and evade the volatility that we are seeing right now?
So absolutely, you see, we have 87% of the oil requirements we still import, and crude is coming down. And I think with solar becoming more popular across the globe, and with the global economic growth numbers being pulled down because of the tariff negotiations, I think our net bill for oil will come down, which is extremely positive for us. RBI has already cut 50 basis point. Another 75 basis point can come in more. Also, RBI has given some more liquidity. Elections are behind. Our fiscal deficit and current account deficits are all in control. I think everything good which can happen with the country is now happening. So we are extremely positive. I have never been so positive in last couple of years. We were always cautious. Now I think if any data which you see, that is, everything is coming in our favor, and inflation particularly, if you see, I am more positive seeing that in this kind of April, May is not the month where we don't get hit in the inflation side. These are the months where we start getting hit on the inflation side, at least from the perishable side. That also has not hit us hard. So we are doing good on that, and also weather for the monsoon forecasts are quite good. We are expecting normal monsoon this year. So today, if you see everything positive which is required, it is there in place. We don't know about tomorrow because things are very volatile globally. Things keep on changing very sharply. But seeing today, it looks everything is quite good.
Okay. You did mention that there's a good monsoon forecast also. Do you believe that some of the rural consumption plays also will have an upper hand and a leg of recovery going ahead?
So we have a little more structural view, which is different than most of the people in the market. Is that we don't see that while India is a self-consumption economy, domestic consumption is very high, and that's the reason some of the consumer stocks keep on trading at 50 to 80 multiples. Also because there is a certainty that this country will keep on growing because of our young population, increasing per capita income, all. But we believe that incrementally, if you see the government's whole thought process is that to make India a manufacturing hub also, and so we would like to play the direct beneficiaries rather than derivatives. So remember that the consumption stocks and consumer stocks are, while they have a lot of certainty and they are good, but they basically derive their strength from the actual employment, actual per capita increase, and all that. So we would be more happy to play directly the manufacturing theme rather than playing the second derivative, which is obviously less beta and more secure, but at the same time the returns are very minuscule. So we are always more focused on directly playing the manufacturing theme rather than playing the consumer theme.
Okay, directly manufacturing theme. What about specialty chemicals, Sandip? Because China plus one strategy could also play out at this point of time. You also mentioned that the anti-dumping duties could well remain solid now that the government is looking into it. Do you expect the specialty chemical stocks to benefit at this time?
So specialty chemicals should ideally benefit. The only challenge with the specialty chemical is that China's huge capacity, and while government may safeguard direct dumping in India, but there are many other ways we have seen in the past that the goods find their way through some other proxies, and that is the big risk. And also if they go, and we also have some dependency on the export side, and if these goods go to the markets where we export through some other proxies, then the whole sentiment is a problem. So two segments where the Chinese capacity is extremely huge. They have good capacity everywhere, but I think the chemical side and the solar side are two spaces where the Chinese capacity is very high, and they can run on relevant costing for long term, for a very long period of time. So that is the space which we will be little cautious always, and we will be more keen to play where small manufacturing pieces, small segments, power, all those things where there could not be such mass scale dumpings.
Okay. Sandeep, any other sector that you're watching out for? You did mention that you're quite bullish on the manufacturing theme at this point of time. Any other themes that you're keenly watching out for?
So we are also very positive on the water side. We are also very positive on power side. So these are the themes which should do extremely well. And obviously, one mother theme is the economy, which best proxy is the banking. So we are very positive on BFSI, manufacturing, power, and some of the other spaces which are building material particularly. So these are the spaces where we are extremely positive. Water theme. These 5 spaces are our favorite spaces right now.
Okay, all right. With that, we have to let you go, Sandeep. But thank you so much for your time. We hope that we connect with you soon.
Thank you so much.
All right, let's take a quick check of the markets. Well, the optimism continues because Sensex is up about 97 points and Nifty is also above that 23,300 levels. But it is a quiet day for the markets, flat in the green at this point of time, and hope that this recovery extends throughout the day too. But if you look at some of the sectoral gainers, majority of them have flipped into the green, except barring your Nifty IT index, which is flat in the red at this time, and Nifty oil and gas index, which is about 0.2% downtick, which we are seeing, and Nifty metal index with about 0.3% cut. Other than that, we can see Nifty Bank Nifty index doing well, FMCG index doing well, Pharma index flat in the green at this point of time, and Nifty Realty index definitely one of the top sectoral performers at this point of time with about nearly a % gains or so. Broader end of the markets, however, they continue to outperform. Small caps with about 0.5% gains coming in, and the mid caps with about 0.4% gains. So yes, the broader end of the markets are doing comparatively well than what the large caps are displaying today. But yes, we'll watch out whether or not this recovery sustains. But with that, we have come to an end of this edition of Opening Bell. Don't forget to tune in at 3:30 for closing. We will be discussing how the market is developed and what the stocks were in focus. Until then, signing off.